Welcome to the Apartify Daily Podcast, the show where we bring you updates on the latest news and trends in the multifamily industry. I'm your host, Roderick Jones, and I'm excited that you are joining me here on another episode. And if this is your first time here, basically what we do is throw up three articles from our Apartify newsletter, and we read the articles, and then I give you some commentary on what I think is going on in these articles, and then get your feedback and listen to you in the comments when you drop some comments on the video or you drop comments on our Instagram or YouTube channel. So that is that. If you'd like to see a copy of any of these articles, you can go to apartify.co/news, hop on the newsletter. It's 100% free, and you get all of these articles sent to your inbox every single day. We're keeping multifamily operators in the loop by sending them 3 articles a day so that way they can get smarter on multifamily. All right, with that being said, let's go ahead and get into article number 1. So, article number 1 reads, we're just coming out of the gate with the hottest news on the market. So, the Fed on hold, inflation still a hot topic. So the article reads, the Federal Reserve threw investors a curveball this week by deciding to hold interest rates steady. This comes as inflation continues to cast a long shadow over the U.S. economy. So Fed in a holding pattern, balancing growth and inflation. So the Fed's decision to keep interest rates on hold signals a cautious approach. Raising interest rates could cool inflation, but it could also slow down economic growth. The Fed is likely waiting for signs that inflation has peaked before hitting the brakes. So what does this mean for multifamily investors? This news is a bit of a double-edged sword for multifamily investors. On one hand, stable interest rates could mean consistent financing costs, and on the other hand, it could mean persistent inflation eating at your potential returns. So how do you navigate this uncertain landscape? Double down on value. Focus on multifamily properties in strong markets with healthy rent growth to combat inflation. Shorter horizons may be smarter, and stay informed and look ahead for future news. So what do I think here? So the Fed chairman has been very what a word I'm looking for. He's been very upfront about what his approach has been. So everybody always goes crazy when he says rates remain unchanged or we're increasing rates. He's told you from day one, we are trying to get inflation down to 2%. So anytime the meeting comes up, all you have to do is say, is inflation at 2%? Is it close to 2%? If the answer is no, then rates are either going to increase or they're going to remain unchanged. If the answer is yes, we are close to inflation, and we're either close to inflation inflation is under 2% or we're close to inflation, then rates are going to go down or we're going to remain unchanged. So it's the same thing. So he's told us from day one, he's trying to get inflation down to 2%. So when we look at the CPI and we look at inflation, if we go in there and we see that inflation is not 2% and the Fed speaks today, then we know that rates are going to remain unchanged or they're going to increase. Now, if we wake up in the morning and we go to CPI and we see that inflation is at 2% or below, then rates are going to either go down or they're going to remain unchanged. It's either or. It's not that hard, guys. So Fed keeps the interest rate the same. I'm not surprised by that. And here's how you still maneuver through all of this. So even though the Fed kept the interest rate the same, that doesn't mean you still can't do deals now. Only thing that means is the cost of capital is higher. When the cost of capital is higher, valuations come down. When valuations come down, more deals can happen, But here's the problem. Sellers want inflated values, buyers want realistic values, and the delta in the middle is still what everybody's trying to figure out how to work. So that's the big problem. Inflation and high interest rates is not the big problem causing the market to be on hold. The biggest problem is sellers needing overinflated prices because they're still trying to sell on yesterday's prices. That's the big problem. Let's move over to article number 2. And again, if you want to see any of these articles, you can go to apartify.co patreon.com/news. Hop on the newsletter, 100% free. So let's go over to article number 2. So article number 2 reads, Orlando's downtown, I can't say downtown to save my life today. Orlando's downtown booms with a $500 million mixed-use project. So the article reads, A Party5 Daily brings you exciting news from the world of multifamily development. The beautiful city is getting even more beautiful with a new mixed-use project rising in its heart. So Westcourt Orlando, redefining downtown living. Orlando is witnessing the groundbreaking of a transformative mixed-use development, Westcourt Orlando. This is a $500 million project spearheaded by a development team consisting of SCD Development and JMA Ventures and Machete Group. And it is poised to revitalize Orlando's downtown core. So basically the project is a blend of urban conveniences. So Westcourt Orlando promises a vibrant blend of uses encompassing a 260-room hotel, 270 high-rise apartments, 3,500 seat live entertainment venue, Class A office space, dining and retail options, a 1,100 stall parking garage, and 1.5 acres of green space. So basically, this is a catalyst for downtown growth. Westcourt Orlando is more than just a development. It is a symbol of Orlando's commitment to urban revitalization. Here's what this project is expected to do. Number 1, attract new residents. Number 2, boost the local economy. And number 3, enhance entertainment options. So what do I have on this article? I think this $500 million project is a good thing for Orlando. If you notice, they're building hospitality, they're building apartments, and then they're building Class A office space. Now that is a crazy thing because everybody is saying office is dying. It's never going to be the same. Everybody's leaving. They're never going to return to work. So tell me why this development company in Orlando is developing new Class A office space downtown if office space is disappearing. My point exactly. Office space is not going anywhere. We're going to figure out a new way to use it. Everybody's going to return back to the office space and they're going to get work done. But all in all, I think this is really good. It has the big three factors, what multifamily investors are looking for, which is attracting new residents and attracting jobs. So this project is going to bring jobs to Orlando, which then in turn is going to attract more people that want to move to Orlando, which then skyrockets the values of everything in the area. So downtown Orlando is an emerging market. And then everywhere on the outside of that emerging market is going to feel the effects of this new $500 million project. So I think this project is really good. I think it's very interesting that they're building Class A office space. And I think it's going to be a great thing for downtown Orlando. All right, so let's move over to our third and final article of the day. And again, if you want to see any of these articles, you can go to party5.co/news. Get on the newsletter, get the articles for free, and then come on the podcast and hear my opinion about the articles. All right. So our third article reads, Slowdown on the horizon. Job growth stalls in April. So basically, today we delve into the recent report from Globe Street indicating a significant slowdown in the job market for the month of April. So April showers bring fewer jobs. The latest data from the Bureau of Labor Statistics reveal a sharp decline in job growth compared to March 2024. Only 175,000 jobs were added last month, falling short of analysts' expectations and making a 4-month low. So is this a cause for concern in the multifamily market? While a single month's data point doesn't necessarily signal a recession, a sustained slowdown in job growth could have implications for the multifamily market. And what these implications are is number one, the demand for lower rentals. I mean, it could bring a demand for lower rentals and it could bring the potential for rent stagnation. So is it time to panic? Not necessarily. Here's a more balanced perspective. The unemployment rate remains still low and long-term demand drivers remains intact. So this is not this is it's not time to panic. So that's that article. What is my opinion? I think we're going to continue to see job growth decline. But I don't believe it's time to panic. So job growth is going to continue to decline, and we're just going to keep seeing that. And I think in the multifamily space, if you pick your markets right, so if you look at those emerging markets, if you look at the markets where, job growth is happening, I think you'll be okay. But I think overall we'll see job growth decline. But this is where you put on your operator hat and to follow the top two metrics. Where are jobs going? And if jobs are going there, that's where people are going. And in every pocket in the country, we have 50 states in this nation. There is job growth happening in one of those 50 states. And in those 50 states, there are a ton of submarkets. And within those submarkets, there are pockets within those submarkets where job growth is booming. So I think it's up to you as the multifamily operator to figure out where those pockets are and to craft your investment strategy around that. So that is it for today's episode. Remember, if you want to see any of these articles, go to apartyfi.co/news and hop on a newsletter. It's 100% free. They'll be delivered straight to your inbox every single day. And let us know your thoughts on all three of these articles. What do you think about them? Do you think job growth is going to continue to slow down? Do you think it's going to pick up? Do you think Orlando building Class A office space is a good idea? Do you think it's a bad idea? Do you think the Fed leaving the rates unchanged is a good thing for the multifamily space or a bad thing for the multifamily space? I want to know. Drop them in the comments. Leave it in the comments and let me know. So with that being said, I'll see you on the next episode.